The sentiment for Bitcoin and cryptocurrencies has been dire, basically in the toilet. However, the bottom signals have been piling up, as we've been pointing out on each of the videos since that low. The 18th of February here, looking at what it feels like to miss a bottom. Not trying to be ironic here, talking about bottoms and toilet sentiment, but we do see very similar things across many of the lows for Bitcoin and the traditional markets. And now I promised you a whole lot of hopium data in yesterday's video, and I've got that plus a lot more in today's video. So hit the like button if you want to feel a bit of hopium after going up 5.8% with Bitcoin, getting very close back to 99K. Subscribe to the channel, and if you want to go further to helping out, no BS TA and economic data, just the pure facts from the charts, make sure you share the content with a friend. It is your home of macro cycle analysis covering stocks, Bitcoin, cryptos, and the real estate cycle. All right, guys, let's kick it off with a couple of anniversaries as we hit the 5th year anniversary of the all-time high prior to the COVID collapse for the S&P 500. So February, from what I've seen over my many years in the markets, is a very fascinating month. There's a lot that happens in this month, and the sentiment can get broken down and built back up within that period. March is also another one of those months. The market typically, or there has been a very high percentage of lows formed in March. Doesn't necessarily have to be the final low, but very significant lows form. We can remember back 2020, we had the March collapse. We've seen other Marches like the GFC 2009, that happened at that particular low. So 5 years ago, we saw the all-time high before the COVID collapse. 4 years ago, there was another all-time high for the S&P, then a 6% correction, which is pretty substantial for the S&P 500. 3 years ago, just days before we saw Russia invade Ukraine, 2 years ago was the beginning of that banking crisis, or as we talk about it here at the Investor Accelerator, the non-crisis, because essentially the markets didn't care and boomed from that point. You know, it's up over 50% since that the non-crisis. A year ago, we saw a new all-time high breakout for the S&P 500 after all of the recession calls day upon day upon day, reasons why the market had to collapse. So it was a big thing back then. And of course, through 2024, we've basically been up. So the recession calls have become a lot less. This year, we've seen a fair bit of fear in the markets and a new all-time high breakout for the S&P 500. The reason I bring these two up in particular, which are almost seem like they're opposite to all of the fear of the years prior to that, is that when we see all-time highs in February, there is a very good chance, an even better chance than the normal odds, that the 12 months ahead are going to be positive. They're going to be even bigger for the S&P 500, which, as we've been covering here, is a very good sign for Bitcoin, potentially altcoins as well. But we're focusing here on Bitcoin and what happens when the S&P 500 goes on a very clean, clear trend above the old all-time highs, which is potentially what we are breaking into now. We do have that logarithmic resistance line overhead, and it keeps testing that. Before I get too far ahead of myself, let's have a look at the data for the S&P 500 breaking out into new all-time highs in February and what those next 12 months look like, because this is part of the bullish hopium for Bitcoin. And then, of course, whatever altcoin you've decided to get yourself into. This goes back to 74 years. So we've got 74 years of data here. We're into the 75th year, and we need to see what happens over the next 12 months. There have been 22 prior years since 1950 in which the S&P posted an all-time high in February. So it's done that, did that over the last few days on the 18th and 19th. There is the data right there. And of those years, on average, fared a bit better than the typical year, with 19 of the 22 cases positive for the following 12 months. So 19 out of 22 is about, I think, is an 86% hit rate. Normally, it's a 73% hit rate for bullish years. You basically can put your money into the markets 3 times out of 4, so 3 years out of 4, you're going to see positive results. This is for the S&P 500. Now, I would want to go back further than that in history to confirm those numbers, because it doesn't mean it has to happen every time. But with the 74 years of data we have here, a lot better than what most people look back. They look back a year, 2 years, maybe 5 years. If you're going to your typical fund manager, they only ever show you like 5 years previously, never 10, 20, 50, even 100 years. and they just sort of show you, well, the market's been up. It's because markets run in roughly 10 to 20 year cycles. We're looking at those halfway points of our 18-year cycle. More on that in future videos, because you guys know that we talk about the 18.6 year cycle here, which basically dictates the entire world markets, real estate, stock markets. That goes for the US, the economies, and then there's a trickle over effect for the UK, Canada, Australia. Okay, that's my little rant on the 18.6 year cycle. Now, none of these 22 cases were double digit down at the end of those 12 months. So here it is. This is in the green section on this side. A lot of numbers in your face. So just look at this section, the 12 months. There are a few negative years, as it said, 19 out of 22. Therefore, 3 of those are going to be red, 4.9, 5.8, 8.2. Here is 2015. Those of you who are following your Shemitah calendars know the difference there. Here is your Shemitah year as well, 1987 and 66. I'd have to go back and do my numbers, but it's somewhere around the Shemitah. Okay, measuring worst case, that the Shemitah year, typically you see down years or very blunt years, not really too much growth. That's if for anyone playing at home. Measuring worst case drawdowns from the end of February, only 4 of the 22 cases experienced a 10%, and 14 had less than a 5%. So there's some great probabilities for the S&P 500. And then the way I'm playing it is, of course, my Bitcoin position. Since 1980, there was the only time, just once, S&P has peaked for the year in February. So that was 2015. There's a 98% probability S&P will achieve at least one more high outside of the month February. So we could see further upside here for the year of 2025. In terms of where the market typically peaks, you can see that it peaks towards Q4, and sometimes you get that rollover effect into Q1, which is basically just or almost exclusively January. You can see this is for the how often the S&P 500 has peaked for each year of the month since 1980. That is now 44 years of data, if I'm not mistaken. We saw January 3rd or 2nd in 2022, and then the market ran right down. So basically 2021 was the whole year up, as an example of why January gets an all-time high. And then apart from that, October, November, really high there at 9% each. And then of course, December, 23 of those times. So half the time the market generally will peak in December. And there's plenty of reasons for that. You can put it down to any number of things. People probably point at the fact that the US has their tax year ending in December, and they might be selling off some of their stock to balance out whatever it is in their portfolio, pay off some tax, so on and so forth. So plenty of reasons why that could happen. Nonetheless, if the data suggests half of the time you see a top in December, probably a good idea to keep a lookout for that coming into the end of 2025, potentially even into 2026, looking at some sort of tops around Q4. So we've got a ton of hopium data there for the S&P 500. How does that look on a chart with Bitcoin? Further upside, are we bullish enough on BTC? Well, we might not be bullish enough. We don't know that for sure. But for now, we're definitely seeing the trend continue on for the S&P 500. And you can see this overhead logarithmic resistance. This is connected to I've got to get the dates right here, the GFC high and the top of the market, the old all-time high in 2022 before we saw that bear market in 2022. So S&P 500 has now hit its head on this line multiple times this year and the end of last year. I'll call this one in November, again in December, coming down again in January, and now we find ourselves here again in February. All the while, the lows are getting higher. Now, there is a very strong chance that this is building up to break out of this top, break out of these highs at around 61.50. And as I've pointed out many times now on the channel, I think if we start to break out of this trend, it could really start to set things flying to the upside. That is a good thing if you're in the market. If you're out of the market, that is going to bring on FOMO, and it is most likely going to set your portfolios up into a very difficult position moving forward, which brings on the volatility. If you've made it this far in the video, you're doing better than 65% of people. Now, if you want to increase those odds, check out the free report, link in the top of the video description, and you can also get yourself a 7-day free trial of TIA Premium and see whether our crew of active traders and investors suit your needs. They suit your trading styles, your investment styles, and are there to help you make a plan along the way in this pretty crazy journey when it comes to the emotions of the market. So hopefully you can find something valuable and objective to apply to your trading strategies. That again was the top of the video description. That's the free report, and then also the 7-day free trial for TIA Premium. Okay, back to the bullish hopium and data. How does that happen and why does it happen? Well, if you're not positioned or you don't have a plan of how to get into the market, you don't have any signals of buying in now, maybe where to put your stop losses in case this is just a fake out and we come back down, right? You're just not set. Well, then the FOMO ensues because you're just seeing the market go up. It's in S&P, and I suspect that Bitcoin will also follow trend as it has done through its entire life. You can see we go back, we've got the squares here, which is where the S&P 500 has been on a very strong uptrend. Bitcoin price has also followed suit with its strong bull market through those same periods. And then when the S&P is a little bit choppier here, that's when Bitcoin's going on a pretty severe bear market or in the midst of the early stages of the bull market, just like what happened in 2019, wild swings, and then the market started to charge towards the end of that cycle along with the S&P. 2016, 2017, S&P was charging, Bitcoin was also charging forward. And then through the earlier cycles here in 2011, 12 into the peak of 2013, some reasonable trends started to show, and especially as it broke out into the new all-time highs. You also had some pretty strong trends for BTC at the time. The market rolled over, basically didn't go anywhere between late, sort of mid-2014 into 2015, had those two severe corrections, and through that time, Bitcoin was in its bear market. So that's why I'm still pretty well focused on how clear the trend is for the S&P 500. And if it is going to break through this logarithmic diagonal, right, the overhead resistance here, it could be on for a pretty, look, we could call it a severe ride to the upside, but it's only going to be feeling severe to those who will be feeling the FOMO of missing out. That's one of my theories that I've been watching now for several months as we've come back up to this line multiple times now. As we looked at November, December, January, we're now into February, we've seen it again. The lows keep getting higher. This is getting a little bit crazier in terms of how that market is building up and where those lows are. Another thing in the shorter term here for the S&P 500. So I'm building on all of this reversal signals for BTC, right? I'm looking at the bullishness. This is the sort of stuff that you might have recalled that we looked at back in 2022 at the June low. This is for BTC in this orange line here at the second low for the stock market and for BTC. That was in October and November. We looked at it in March 2023. We looked at it again at all these lows that happened through 2023, and then to a lesser degree in 2024. What I'm seeing is a very similar thing playing out here, where the market has been too fearful when the price action hasn't been giving you the same sort of indication. The price action has continued to hold up with each of the fearful corrections, which is part of our wall of worry and how this market continues to climb, showing more of that strength. Sure, tomorrow we could have a big down day and it comes back to 59 or 6,000 points, but for now the lows have continued to be higher lows, and we still have very strong lows back here in 2024, August, September, and November, that if there was to be a correction, would have to break down. The market would have to get below those lows. In particular, this one here that I've been pointing out for weeks now, 5,100 points. Okay, so for now, S&P is still holding up. The NASDAQ is holding up very well, putting in, well, at least for the NDX, has touched a couple of new all-time highs here. The futures market, a few points away from that. For the markets, the global markets around the world, Australia's hit a new all-time high last Friday on Valentine's Day. Had a nice down week this week, big corrections. Canada still holding up within 1.5% of a new all-time high. The top 50 in Europe has hit a new 25-year high, a new all-time high for the top 50 in Europe. Yes, we always talk about it. You could put it down to inflation, money printing, whatever. The fact of the matter is it's hit a new all-time high, and your money will be buying less of this the higher it goes. So the money has to go somewhere, whether it's gold, Bitcoin, real estate, the stock market, you name it, it's entirely up to you. But the game here is that these prices, the asset prices, are going up as part of the 14 years up than the 4 years down of the 18-year cycle. Of course, they're all roughly speaking, could be slightly longer, slightly less, okay? So that's been led, the 50 in the Europe has been led by the UK, new all-time highs last week. German market, new all-time highs 2 days ago. Now we have a little bit of a correction. This has been a significant move. France, a couple of percent away from a new all-time high. For the Dutch viewers, again, just touched a new all-time high on Tuesday, bit of a pullback here. And for Italy, new all-time high there on Wednesday. China, also now pushing up in a more sustained manner than what we saw back in September of 2024 when the Chinese government talked about a ton of money printing. Now we're starting to see a bit more of a sustained growth here. 50% levels getting in the way at the moment. Ideally, you see a bit of a break here, 13,500 points. Then China is also on its way to higher prices. The Hang Seng has been holding up and pushing higher as well. The Nikkei, this is the Japanese market, about 10% away from a new all-time high again after hitting an all-time high of 34 or 39, I think it was 34 years, hit a new all-time high back last year in March. Hadn't had a new all-time high since 1989. And the Indian market, the emerging markets here, holding ground at the moment above the 50% level. So things are looking relatively strong across global markets. And I think it's just a matter of time again until they start to really push higher. I mean, it's only been a couple of days down. They have been pushing higher for some time. Now, another reason could be because the US dollar is going down. So we're starting to see markets across the globe, in particular Europe, going up. The euro is increasing. The Aussie dollar is increasing against the US dollar. The US dollar is coming down against the Japanese yen, coming down against the Swiss franc. And it's coming down against the basket of currencies, of course. This is your Dixie, the DX, DXY. It has broken down now. We have an overbalance in price and an overbalance in time. Now, if you're new to the channel, thank you very much. Hit the subscribe button so you don't miss out on this trend-changing data indicators that we look at here. Overbalance in time and price. We've got that now for the US dollar. The next thing to cover for a significant change in trend is a significant swing breakdown here. That's this low, and the 50% level. That's at 105. So the market is now about 1.24% away from giving us those next 2 green ticks, which would then confirm a change in trend, which then vastly increases the probabilities of further downside for the US dollar, coming back to test these lows at around 100 to 101. Now that we've seen a couple of updates for BTC, the Fear and Greed Index has jumped to green again. The day before, we're at neutral at 49. Day before that, neutral 48. And then there was a little bit of fear there on the 19th. But today, Bitcoin up 1% or 2, you're back into greed. So there is still some interest there. But we're not seeing the same sort of interest when it comes to actually trading in the markets. Liquidations are still down. The shorts got a little wrecked today, 171 million. Whereas the longs were just at 75 million. So really only $250 million overall. We're looking somewhere above $500 million of liquidations to confirm or increase the probabilities of a significant change in trend that we're going to see further upside. And the same deal here with the daily exchange volume, which has continued to fall. 43 billion, still above the previous lows. And ideally we start to see this shift over the coming weeks. Higher highs, higher lows form, just like we saw back in October and November. Even though it was pretty calm there, there's not huge swings, which is typically a sign of accumulation. The accumulators, the smart money, don't necessarily want to see wild fluctuations. That's more of a sign of distribution at the highs. And that's what we did see through November, December, January, and February. So it does take time. I know we talk about tops and people want to know the tops today, I got to sell everything and get out tomorrow. But the smart money knows that it takes time to develop these patterns across a broad amount of time. The same deal happens for the lows. It takes some time to accumulate, and then you start to notice some of the signs very subtly. Slightly higher highs, slightly higher lows, and then all of a sudden it happens in a breakout. And that's why I continue to come back to this sort of feeling. This is what it feels like to miss out on a bottom. It happened through September, happened through October. November was pretty much that last signal there before we got this big push up. And the same thing happened in 2023. Going through this entire period, you had August, you had the September low, you had an October low here, and then the market started to break out at the end of October, taking out those highs. Continuing to build on the bullish signals here, really Bitcoin has not broken down much. And just looking at the closes for the month, we are in a red month so far. It only needs to climb about 4% and close above 102,750. The quarterly chart is the important one that I've been watching for some time now. This has got a month and 11 days to go. We have been watching for how many red quarters we get in the bull market. Previous bull markets have shown, I believe it was, this one had 3 in it. This was a red month on some other charts. This one was also 3, 1, 2, 3 quarters. So we're on 3 months here, 3 red quarters in that bull market. The bull market was 11 quarters. The prior one was 12 quarters. The 2021 top and bull market was 12 quarters long and 4 red quarters showed up in that month. So we're a 4, a 3, and a 3. As I said, this month here, this quarter was also red. At the moment, we're at 2 red quarters for this bull market. So if this month, well, March, if March closes below 93.4, that would give us our 3 red quarters. Therefore, there's probably less chance that we're going to see any more red quarters, and you're going to see even further upside here. So the idea of the theory of being not bullish enough, I think, continues to hold very, very true, especially as the price ranges still remain above $90,000. Now, a little more hopium for the price targets themselves. We are in the right side of the cycle, the right translated cycle is guaranteed now. So the top could be in, but we've guaranteed a right translated cycle for BTC after all of the fear 12 months ago that it was going to be a left translated cycle. March having a top and then the price coming back down. So we're in a right. Things are looking relatively rosy and healthy here. Now for a bit of a price projection to the upside. I've got my cycle low to the 74K top projected off the low here. We've hit 100%. So this is a really good indicator that this is, it's a good plan to follow. Doesn't mean it has to be exactly on the dollar, but we're just looking at this as a bit of a roadmap into around 136. Of course, along the way, it's not going to go straight to 136. I'm looking at multiple shorter term price targets using the same strategy. So just projecting those ranges forward to identify if there are any short term resistance levels. Obviously, we've got to factor in 120,000. That's a bit of a psychological level as well. And then I'm looking towards around that 136. I'll do more of this in future videos. Let me know if you do want to see more of it. I suspect you do. It's obviously being price targets. That's another way to get you to hit that like button as well. And the other thing I'll do is in the pinned comment, if you have the time, drop down what price you think Bitcoin is going to get to before it pauses again. This time it hit 108. Okay, 109, I'll give it to you. Next price target, where do you think it's going to get to before it actually pauses for a considerable amount of time? I think it'd be an interesting one to have a look at to see where the next psychological numbers are. Speaking of, well, that's not a good segue. USDT dominance. We're looking at the pullback here. Now, really, really simple. If this chart goes up, then this is bearish for Bitcoin and cryptos. If this chart goes down, then absolutely F off bullish for Bitcoin and cryptos. It's still in the trading range. It's still tracking along sideways here. It's hit the 100% level. This is off this double bottom, low to high to low again, hit the 100% and has not rejected enough. Now, there's still a chance that we come up and test 5.1, 5.2%, which would definitely send shockwaves through the market. It would be a similar sort of move to what we saw on the week of the 3rd of February. So keep that in mind if this does not break down. Until this breaks down, we're still on the verge here of any sort of tests higher. Now, where I'd start to get a little more bullish is if it breaks back under 4.2%. That has basically been a very solid line in the sand for the bull market. Anytime this USDT is above 4.2%, you're really not seeing big moves for anything. For Bitcoin, ETH, SUI, XRP, altcoins, you're not seeing too much going on there. It needs to get back under 4.2%, test these lows again, and ideally break down. I'll add in the extra big F-off mania here. That is a very, very big low for this market to break. If USDT dominance can break that, I think we've got some absolutely phenomenal price gains ahead. And it's, look, I'm going to say a lot of it's going to go in BTC. That's probably a given, right? But you're then going to see bigger percentage gains across some of the stronger altcoins. Might be a good segue to get into, say, ETH and a few others. Now, ETH has been talked about a lot. I've just heard about it over and over again on X. The chart doesn't necessarily show that. We're seeing CFTC, CME, ETH cash settled leverage net total. So this is basically the speculators have built the largest Ethereum short position. It hasn't been going down, so we may get an upside here, meaning the short squeeze. So a lot of shorts happening. It's not going down. They're going to have to close their positions eventually, which means they have to buy to close their positions. And what happens when you buy? What happens when a lot of people buy? Well, the price goes up. So even though I think there is still further upside for ETH, I'm a big bag holder of ETH. I still give it a lot of shit. I don't care. It's just another 3 letters in my portfolio. The upside, I think there is still there. It's still one of the weaker altcoins out there. It's still underneath 2,900, which is a major 50% level. It's broken past that 50%. And it's just not doing enough here in terms of volume on my Binance chart, being one of the largest exchanges in the world with the most volume, to get back above areas of key resistance to then turn it into support. Once it can get past 29 and ideally 31, then it's going to be much stronger to tackle those highs and get into a better position. Basically get it into one of the stronger positions. Any day now, it could go up, down, or sideways. We get it. I know, I've heard that many times before. If you feel like it, drop it down below. Use your keyboards and get into it. It always helps the algorithm, even if you've got some smart ass thing to say. I mean, I'm asking for it, right? But 3,100 is a big key there for ETH USD. As for Sol, I found one that's weaker than ETH at this point. It's under the 50%. It's underneath the 210s. It's underneath the previous old all-time high and the current old all-time high. And for now, at least coming down to the shorter term time frame, it's unable to get back above that sort of 180 level. There's a key low here that's at 176, another couple of key lows here at 176, 175, and the nice round number there of 180. So if this is just a failed attempt at testing previous support, that becomes resistance and it comes back down. Otherwise, it must get above 180 and then above these previous lows here at about 190. So it's got a lot of work to do to get back into a short-term place of strength. Medium term, it's got to get back above 200 and then 210, and that could really start to set it up to a place of strength. I've heard all of the reasons why it should be strong and not to dump it and so on and so forth. I'm not telling you to do anything. I'm just telling you about the chart where the strength and the weakness lies. There's ETFs coming. There's so-and-so doing this. There's memes coming out on that. It doesn't matter. What matters is the price on the chart and whether the chart looks like, at least in my opinion and my analysis here, whether it's going to go up or down. Now, SUI is in a slightly stronger position here as it's continued to hold above the 50% at 290. The volume hasn't come back yet, so we haven't seen the absolute strength in this market to, push it back above 390 to $4. Ideally, I mean, look, if I want to start to enter it a bit more, we start to get rejected at about 360 to 390. It comes back down and starts to consolidate above the previous low here at around 240. But even if that breaks down, there's still plenty of support back at the previous old tops around 195, $2, up to about 220. So it's got a lot of breathing room to the downside if it continues to trickle down, because we're not seeing the volume come back into SUI as yet. But there still seems to be plenty of time here. It hasn't gone down for very long. It's currently 46 days down from the top, and previously it did 131 days down, the exact top to the exact low, and it was still able to do over a 10x from that bottom, 46 cents up to $5.36, giving you an 11x there. So it's still very, very early days. Not too concerned here. And the final one is XRP. After dropping below 260, so the major, the downtrend 50% level at $2.60, and then popped up again, and now it's coming back down. So I think it just needs a little bit more time at these levels to solidify the potential gains it's already had, and then build its position for that next move to the upside. So it's still looking like it's in a relatively strong position as well. So overall, the markets are looking okay at this point. The strong ones are looking okay. The weak ones, not so bad, at least the ones that I've covered here. And for Bitcoin, You're seeing slight increase in volume, so some subtle signs here. Still under 99K, but it's got to build from somewhere. We're up 6% from that low, and that was one of those at least early signs and shorter term turning points that we had looked at, or the possibility, and I'm not trying to call that I knew the exact low, but the possibility of that being a low was increased with the amount of negativity we saw on that day. That day was 18th. We saw the market running down into that low. There was a lot of pessimism around altcoins and Bitcoin and that this thing was going to be over. I talked about it. I had to put it in some of the titles. Otherwise, if you're too bullish on those days, people start to freak out the other way. So on those days, they are a look at the market sentiment. And I believe we saw even worse sentiment on that day than what we saw on the biggest liquidations in history. That was this day here, the 2.2 billion. So in terms of the market sentiment and how people were talking about the markets on X and other socials, this day here seemed to be more extreme than that day. If you have a different view on that, please let me know in the comment section. But that is essentially, from what I see, I'm following the markets day to day. This was far more negative than this day, yet the price was higher and closed above all of these lows here. So that's a bit of a subtle sign that we're coming towards the end of the downtrend. Yes, we could go further and bounce back. That's okay. But in terms of the time now, we're starting to come towards the end of the time frame of this move. Like, subscribe, share the content with a friend. There'll be a video popping up here you can watch next, and I'll see you guys back at the next video. Until then, take care. Peace out.